Hey everybody.
Sean Kelly here of Price and Price Group with eXp Realty.
That's right. Today we're going to talk about
Oh, I'm so excited. What are we talking about?
what really happened to the Northern Virginia real estate market from the pandemic.
Oof. Oh, it's going to be interesting.
Yeah.
Like what the effects were and everything.
Yeah, now that we're out of it and things are kind of, dust is settling, we're going to talk about, okay, what really happened.
Okay. Like hindsight's 2020.
Right.
Okay,
Yeah.
sweet. All right, well, let's dive into it. So we have notes?
We always have notes.
We always have notes, yeah, because we don't.
Okay.
And then we'll rip.
Riff. I think we're going to riff.
Okay, so the first thing that we saw was when the buyers were coming into the market was a
significant shift to rural areas.
Yes. So Loudoun County blew up. Centerville. We started seeing Gainesville blowing up. We saw Haymarket, Manassas, Woodbridge. I mean,
the beautiful farm country, right?
Yeah, absolutely. So people they didn't have to work in the office anymore, so they got this flexibility. They were living in the Beltway. They were living in smaller places.
Right.
They were all on top of each other because school was there, work was there.
Yeah. Yeah, and not only did they have to work from home, but schools closed down, right? So the kids were schooling from home as well, and so they needed to have a private office space where they could get work done. They needed to have a space to school the kids. They needed to have spaces to get the heck away from each other. And there were no social things outside of the house,
Gyms,
right?
Swimming pools, all that stuff,
For sure.
That's
so
for sure.
that was, and they could buy bigger homes because they were more affordable out in the burbs and with larger spaces.
And those home features became much more important. Home theaters, outdoor entertainment spaces, swimming pools, those things became much more, much higher demand because people knew they were going to be sitting at home and they wanted to make it an entertaining place.
That's right. And the people that were selling those big homes, they were usually families. In our experience, a lot of them found the opportunities. They could move closer to their grown children who had moved away.
That's right. So they would go to North Carolina, South Carolina, Florida. They would go all over the place.
Right. So we had this like perfect turnover situation. We had plenty of homes coming on the market out there, plenty of people wanting to go out there. It was available. They could afford it. And we're going to get into that in a second.
Yep.
But there was increased demand. That was another short-term thing, effect that we had in the pandemic, was this serious increased demand. And we're about to go into a lot of reasons why beyond just that. And that's what made the competition really, really high. And what were we seeing the buyers doing with that increased competition?
Well, I saw a lot of people, getting back to one of the reasons, people that lived in small condos, people that lived in more clustered communities. With COVID, with the fear of it, they were afraid and they wanted more space. Also, not just space for the family, but space to breathe. If you're in a 17-story building and you're riding elevators up and down, people were very apprehensive about this.
Yeah, and they were even concerned about the ventilation system. If you remember in the very beginning, that was a big thing. You know, I mean, when there were a lot of questions unanswered, they didn't want to share ventilation system.
So apartment dwellers flooded the market. People that live the condo life and love the condo life, they flooded the market. So that increased demand was all over the place. So what that caused for buyers is buyers had to really learn how to compete. They had to really get aggressive with their offers. And there was not much inventory because the sellers, if they weren't moving to another area and they had one of these properties, they were really nervous about letting go of the property and trying to find something because inventory was so low.
That's true. And one of the things that I feel like isn't talked about as much as it should be, or dove into is the fact that, we've explained and everybody seems to have a good grasp on why people wanted to move, but why were they able to move?
Free money.
There was a ton of free money. Do you remember how much each adult person got in a stimulus check?
I don't remember.
Well, most adults got 3 rounds. I think it was 3 rounds, yes.
Okay.
At $3,200 a person.
So if you had a family of 6, that's almost $20,000 a year.
Well, for adults.
Oh.
I said.
Well.
Unless you have your adult children living at home.
But
then I think they're dependents.
So if you have a family of 6 adult children living at home.
Cha-ching, we need to start making some more babies. Okay.
Okay.
The other thing is we had we remember this.
Unemployment benefits and
yeah.
all that. Yep.
They increased the unemployment benefit. So there was also rental assistance. Go into the rental assistance for me a little bit.
So they had some funding for to help tenants that fell behind on their rent, to help them get caught up in it. They put restrictions on evictions, which was problematic for landlords, but then the landlords were able to apply for assistance as well. That whether that was beneficial or not in the long run, time will tell. Right. But it did allow a lot of people honestly stopped paying rent. We had several investors that their tenants, they knew they couldn't get evicted, they stopped paying rent, which again, more cash in their pockets. They couldn't be evicted, so they had all this money they could save. If they didn't lose their job, they stopped paying rent, now they're liquid. They go and they put the money down. So those were the short-term impacts. So what happened long-term? So time will tell, obviously, but with regard to, if you're wondering what happened here, and there was a moment of like blip in the video, there was just a bit of an edit. So that's, so that rural retreat.
I thought it was a fun grammar fact. Okay, anyway, will there be a rural retreat?
I'm glad you tried to say it.
A rural retreat.
Yeah. So long term, are the people that made the moves out to the more rural areas, are they happy? Is everybody glad, or are things changing?
Some employers are requiring back to the office. I mean, where it was, we don't have to commute at all, and then it was it looks like we have to 1 day a week, to we need to shift our search criteria because now they want us back 3 days a week, and these things could change. So that's a big question mark for some people that, we're kind of shaking that out a little bit. What about the ones who miss their old hoods?
Yeah, so some people just miss the lifestyle. They thought they wanted to get out to the more
burbs.
rural area, to the burbs, and they're like, you know what, I miss the walkability. I miss being closer. I miss, just being in the middle of life. And so they didn't like the lifestyle out there. So a lot of those people are coming back in as well.
And a lot of them did. They are forever changed. If they were told to go back by their employers, they would get a new job. They have chickens and a field and gardens, and they are living the dream.
I think it's probably 50-50. I would say half the people that moved out there and are being called back are maybe a little bit regretful, but the people that aren't being called back, I think they still, for the most part, are enjoying it.
They're very, very happy. So this is kind of a time will tell thing on that. So let's talk about what impact this affects the housing market, not so much in these big rural areas, but closer to home, right? So with the office buildings.
So with everybody leaving and going to work at a distance, the employers no longer had to have these huge office spaces. And so there were a lot of businesses that would shut down or go into smaller places. We even had real estate brokerages that moved into virtual platforms. We moved into a virtual platform at the time. We were with a brick and mortar office. So virtual work changed the commercial real estate space. So a lot of commercial real estate, while the prime stuff is still in high demand, a lot of it is sitting vacant. So how is that affecting real estate or residential real estate directly?
Well, they're doing exactly what I foretold
Yes, you did.
At the end of 2020, and I'm so happy to see it. I mean, I hope it turns out right. So one of the Amazon buildings, I think they're converting into some sort of cloud office space.
Okay.
Weren't you telling me some DC building space that one's turning into a hotel.
Okay.
They're converting that to a hotel in DC. There's a place right here in Tyson's Corner that they are converting to residential. It's like a big office building they're converting to residential places.
Which is going to be a good thing, and that's what's going to have a direct response or direct effect on the residential real estate market, because it opens up doors. And right now we need doors because even with buyer demand decreasing with the higher interest rates, inventory has decreased so much too. We need doors for people, and prices are still going up. Yeah. So I think that one of the big things that really came out of the pandemic was it really showed the importance of homeownership. It showed people how they needed to have their space. They wanted to have security. I mean, so what are some of the benefits of homeownership that really became apparent?
Well, you already hit on the one, which was the security in your safe space, right? As opposed to a condo or an apartment living. That's one. But there was also...
Or even in a rental where their landlord could change their mind and then you're on the street and can't find somewhere to go.
That was really stressful on top of an already stressful situation for many, many buyers many buyers who, even if they had been happy, say when they were renting a house, remember, they just couldn't handle my landlord might do this and might do that. Let me just get out.
And a lot of landlords did, because it was because of the panic. A lot of landlords liquidated because they were, number one, they were afraid the market was about to crash. And then when the market grew so quickly, they liquidated because there was so much equity in the property. So
that's true.
Yeah.
But there was also financial security that came out of it. And one of the things we always talk about with home ownership and financial security.
Your savings account. Yep.
And why is that, especially in our area?
Well, because we appreciated 16% year over year and 10% year over year. So we saw housing prices go up 40 to 50% in a period of 3 years. So if you had $1 million property, that property is now worth 1.4, 1.5 million, sometimes even more. That's a $400,000 gain in 3 years. That's like a professional income.
I mean, that's serious.
Yeah, and they're not going away. So that equity, it's almost like that equity spike happened, and then people were afraid that it was going to come back down, but it never did. It's like this became the new normal. So
and let me just add this in real quick. When you see a house, usually you guys are shopping on Zillow or Realtor.com. Great. But whenever you see the asking price for a house go down, I know it makes us all think, oh, the property, the prices are going down and everything.
Yeah.
That's usually because a person who believed one thing is realizing the actual thing.
So I can give a great example.
Okay.
I'm gonna
I struggle. The struggle is real.
Translate this code into reality. So we went and looked at a property yesterday. In fact, this property was priced at $638,000. It had a price drop from $600 and I think it was $49,000.
You're right.
We went and looked at the property. The property was built in the 1980s. It had all of the original features of the 1980s. And it was priced very, very similar to a property that was the exact same size, but that had been completely remodeled. And it was priced about $40,000 under that house. So at this price point, the property that we were looking at should have been priced about probably $580, but they were priced about $70,000 too high, if my math worked out on that. They were priced way too high, so that price has been coming down. It's not that the property value is coming down, it's just that the price is coming down to where the value actually is.
Right.
So that's what's happening when you see our prices come down.
Yeah. In our area.
In our area.
In Northern Virginia, DC metro area.
Well, I mean, we went through that market report. Nationwide, this is what we're kind of seeing, but it's more specific, very specifically to here. So. So keep that in mind.
Yes, that's true. It's not a global prices are falling. It's more owner, their listing agent maybe, or gosh, am I doing it again?
The owner had unrealistic expectations and their listing agent was not able to communicate that to them. So they came to the market with the intent of eventually making price corrections so the price got to the proper value. That's what just happened. Okay, so that is it.
How are you so good at that? You're so amazing. Wait, we have one more. Stability. Homeownership adds stability to families. It adds economic growth to the whole community, right? Yes. Because you're more involved and invested in your community. I took these notes, man. We're going to use them. Stronger communities, right? And this sense of strongness and communities.
Yes.
Thinking and reduced crime.
Yeah, because people, when they own in the neighborhood, you tend to have less transient people. They have more pride in the neighborhood. Yeah. Okay. Okay. All right, so let's get to the graphs, and then we will get with Tatiana for the Mortgage Minute. Okay, so let's look at what's happened in the real estate market for the last 7 days. It's been interesting and it's been honestly a little bit surprising. So let's really just dive into the graphs. So you can see here that our buyer activity, as always, is our orange line, and then our blue line is our inventory. And while we had been trending, I'm going to get my pen here, while we had been trending kind of in a downward way, if you look at from this point, it looks like we're starting to trend back up. Now, what this is, when we're looking at this graph and we're talking about this area right here, we're talking about overall market activity. So market activity is where the inventory and the buyer activity is happening. You can see that we saw a downward spiral, or downward trend here, which just meant that market activity was slowing down, but it did not mean that prices were coming down, because even in that slowing down of market activity, you can see the buyer demand was higher than inventory throughout the whole period. So we were in a seller's market, which means prices continued to go up. And then we moved into this period here, and then you can see that it's just in the last few weeks, it seems like the total activity of the market might actually be increasing a little bit. Now, as far as what's going on with regards to strength of the market, it's staying very steady as a slight seller's market. So the strength of the market is still very strong. The strength of the housing prices are still very strong. Inventory is still very low, which means that for sellers, if you are considering selling, this is a great time to sell. This is the time, there's no competition. I know we're in the fall. I know that theoretically there's a decreased number of buyers, but there are buyers out there, and you can see that that we're staying in that seller's market. So properties are selling very quickly, especially if they're priced right for their condition. Buyers, it's a good time to buy because we're not in a market like this where we were in that strong of a seller's market where you're fighting against 5, 10, 15 offers. You might go up against 1 or 2 offers, maybe 3 or 4 if it's a really nice property that's well priced. But for the most part, as a buyer, you can be more reasonable with your offers right now. You're going to pay fair market value, a little bit above fair market value because prices are still going up, but you're not having to escalate 10, 15, 20% above. You're only having to go up, a few percentage points above, and you might be able to actually get some of the contingencies in the offer. So right now is a really good market. A good strong market sits right around this 100% mark here, the orange line. And you can see that we are kind of just hovering right there, a little bit more on the seller side, but it's a healthy market right now. We could certainly use more inventory. If we got more inventory, then there would be more buyers there to pick it up, because remember, our 7-day market report is showing us, on the buyer activity side, it's showing us the contracts that went pending and active under contract. So it's showing the properties that basically went under contract, so we can see that buyer activity, versus on the seller side, we're seeing properties that have come onto the market. So we're seeing the immediate 7-day activities. And so just because buyer activity is only a little bit higher than seller activity, well, that's actually because there's no inventory. If we saw an uptick in inventory, just like we've seen in every situation, if the inventory ticks up, buyer activity is going to go up with it because the buyers are still there. Okay. All right. So that's this week's market report. Buyers, be very strategic. Make sure your agent knows their numbers, and make sure that they know how to write a very strategic offer, even looking at things like terms to try to strengthen your offer so it's not only based on the dollar. And then for sellers, it's a fantastic time to sell because there's buyers out there that are looking. We're going to get over to Tatiana for the Mortgage Minute. If you have any questions, please feel free to reach out to us. All right, we'll see you on next week's video. We're here with Tatiana for this week's Mortgage Minute. And what you got to say?
Well, I've got to ask, number one, what's going on this week with interest rates and the mortgage market? And then at the end, I want to reserve some time because I want to talk to Tatiana about buy downs.
Okay. Yeah. So what's going on with the interest rates this week?
Hi, guys. Well, first of all, thank you so much for inviting me to this Mortgage Minutes. I love it. So interest rates. They went up again. They continue increasing. And, the good question is, when we're going to finally get some relief from the sky-high mortgage rates?
Right.
Probably not until late next year. And, but we might start seeing some rates inch down in the coming weeks and months, depending on certain key economic indicators. For example, yesterday's ADP numbers showed 89,000 jobs created. It's significantly lower than 180,000 in August and 160,000 forecasted for September. So that is the sign of the economic slowdown. And when inflation comes down, the mortgage rates come down.
Okay.
So, the Fed has indicated that it is watching for sustained signs of slowing of inflation, and it's not going to lower the rates again anytime soon. So that's
Not going to lower or raise? Either one? Are they just going to kind of hold steady for a while? Is that what they're thinking?
Yes, that's what they're thinking to do. That's what they're gonna do. And Fannie Mae and Mortgage Bankers Association predict that mortgage rates will fall next year, but they disagree about the fourth quarter of 2023, as some other companies predicting. So they think that rates are gonna start going down first and second quarter of 2024.
Okay, so the beginning of next year, though,
Yeah, that's kind of what I've been hearing.
Okay.
Is kind of like beginning of 2024 to spring of 2024.
Mhm.
The way they expect to
Exactly.
take something down. Okay.
Okay, but then it still bears repeating, I think, every single time we talk, that it still doesn't make much sense for people who are ready to get into a new home now to wait when they can just refinance once those rates are lower, right?
Assuming.
Because
Yeah.
everybody who's waiting, then they're going to flood the market, and we don't have the inventory for everyone to be shopping at once, because then the prices are going to go even higher than they are, right? So
Yeah.
even if the rates are going to be going down, we still don't need to hold off, right?
Exactly. And, those are all predictions. And a lot of times all those, specialists, they prove to be wrong a lot of times. So we don't know how is it really going to go down, the rates, going to go down in beginning of next year or middle of next year. And just like you said, people wait, a lot of people are waiting. And, once rates go down, prices are going to go up.
Right.
More. There's going to be more competition. Yeah, rates will go down, but you're gonna end up with the same monthly payment because price increased.
Right.
We actually did a case study where we looked at buying now with a higher interest rate versus waiting for a year for the interest rates to be lower and buying then, and how it actually cost in that one example of a $500,000 house. It actually cost in the case study like $35,000 extra to wait, even with the extra payments calculated in, even with the all of the factors calculated in with the higher interest rate versus the lower rate, because of that price escalation when the demand hits the market. Exactly. So, and if I can do it, I'll somehow link that to this video in some way, shape, or form.
Yeah, because I know you see that a lot, Tatiana. We've had that discussion about borrowers, and you've gone into the cost of waiting with them, and it oftentimes works out that way, where they're losing money by waiting.
Yep.
Exactly. And yeah, I saw your video. It's great, and I 100% agree with all the numbers and everything you say.
Okay, so I'll make sure I link that.
Yeah.
So what did the rates go to? Because last week they were at 7.31. What did they go to this
So
week?
they're about 7.5. That's with 1 point. Remember that it's always with 1 point. I see now 7.75 is 0 points.
Okay.
A lot of times, of course, it all depends on everybody's situation and credit score and how much they put down, what program they do. And government programs tends to be having lower interest rate than conventional. Right now we're talking about, Fannie Freddie, that's conventional right now.
Okay. All right.
Okay, so we've been talking the last several weeks about ways that people can kind of mitigate these higher interest rates, right? That we're all starting to get used to. We talked about discount points, and we talked about ARMs last week. And this week, would you please go into buy downs with us?
Mm-hmm.
Okay.
Yeah, so the buy downs could be a really good temporary solution, right? For clients that maybe not want to buy now, but they're not too comfortable with monthly payments, and they're betting on refinancing later. buy down, temporary buy down could be a good solution. Created little PowerPoint again, because I think visual is really good. Let me share my screen.
All right.
Let me figure
Oh,
out.
we have the lawn people here again. Just that they showed up right as we were launching.
Oh, really?
I said it's time to set up. That means they're gonna be pulling up any minute.
Yep, and they did.
But we're not even gonna pause, right?
No, we're not pausing. We're at the
Yeah, that's okay, because I can't even hear them.
Good.
Okay, so let's see. Can you see my screen? And it's empty right now, right?
Yes.
Yes.
Okay, so temporary buy down, how does it work? So 2-1 buy down. 2-1 buy down is when the interest rate lower by 2% the first year, then it's lower by 1% next year, and then goes to initial interest rate. So I'll go into details in a second. So let's just look at this scenario. Purchase price is, let's say, $630,000, 20% down payment. So the loan amount is $504,000.
Okay.
And the interest rate is 7.5%. APR 7.677. Because APR is always slightly higher than interest rate, because it factors in some of the closing costs.
Okay.
Yeah.
So the principal and interest payment, the very first year, the interest rate will be 2 points lower than 7.5 than the initial rate. So it will be 5.5%.
Okay.
And principal and interest payment in this scenario is $2,862.
Okay.
The second year, the interest rate is reduced by only 1%, so it's 6.5%, and the payment goes up to $3,186.
Okay.
And then years 3 to the remaining 30 years, unless we refinance, right? The rate is 7.5%, and principal and interest payment is $3,524.
Okay.
And it stays like that for the remainder of the life of the loan, right?
For the remainder, exactly.
Okay.
And so within this scenario, buyer savings over 2 years is $12,010.
Wow.
Okay.
Okay.
So in this type of buy down, actually it's being paid by the seller. It needs to be paid by the seller.
The seller
So
has to
ask
pay
seller
it.
to contribute.
Yeah.
And which, you're gonna be the judges, right? As realtors, it's gonna be possible for every scenario, for every contract. Maybe not. Maybe we can look into different type of buy down. There's also 1-0 buy down, is not paid, it doesn't have to be paid by the seller. It's paid by the lender, actually. And the way that works, I didn't do scenario for that one, but it's pretty much, it's similar. So the rate is lowered by 1% the first year. So instead of 7.5, it will be 6.5. And then the second year, it would go up to the full 7.5%.
Okay. And that's paid by the lender?
I'm sorry. Yeah, that one is paid by the lender. Exactly.
Okay. So that's kind of something that's like a promotion that a lender might offer. Is that what I'm hearing? Okay.
Exactly.
Okay.
Okay.
So this is just little disclaimer that I have to put in the video. Somebody wants to read, they can pause and read, but I'm gonna stop sharing.
All right, Kel, read it to them.
Yada 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 blah blah blah.
All right. Okay. So to summarize, and correct me on any of this if I'm wrong, because there probably will be items. So 3 strategies for mitigating the higher interest rates. A permanent strategy would be discount points, paying points down, and then you're buying a lower rate for the whole time. The next 2 strategies were temporary strategies. The first one being an ARM.
The adjustable rate mortgage.
Yep. And then we talked about those last week. And then this week are discount points. This week are buy downs, which has to be paid for by the seller. The ARMs have no extra cost related to them. And the buy downs have to be paid for either by the seller or the lender. Is that correct?
2-1 buy down is paid by the seller. 1-0 buy down is paid by the lender.
Okay, got it.
Okay.
Okay.
Now, so we can speak to, like you were saying, how likely is it that sellers in this market would be willing to pay for a buy down? Not often.
Yeah. And back when the interest rates first started going up and buyers started first pulling back, sellers got freaked out.
The ones
So a
that were
lot-
already on the market,
the ones that
really
were
had
already,
to sell.
yeah. So they started offering that, but we haven't seen sellers that were willing to do that. And since that first probably 2-month window. And then since then, I haven't seen anybody that's been willing to do that or seller concessions because
Yeah.
the market's still been so strong.
Theory on why they were willing to do that back then when the rates first started changing. Would you guys care to hear?
Of course.
Yes.
My theory is that that was at the peak of the market, right? When everybody was pricing their homes really, really, really high.
Mhm.
So they had a much higher cushion to allow them to put that extra money forward. Whereas now, even though our rates certainly aren't dropping, but they're not getting these crazy high prices that they were before. I think they're more reasonable
pattern,
about how
yeah.
they're pricing, so they don't have that extra cushion built in to be able to offer buy downs when they have plenty of buyers ready to buy it without.
That's
right?
the thing too, is that the demand, when the rates started going up, the demand kind of dropped off for a little bit. We actually dropped into a bit of a buyer's market for about 6 weeks. So
Yeah.
sellers had cushion and they had freak out because buyers were pulling back. Well, then since that 6-week window closed, it's been back into a seller's
Right.
market the whole time.
So what do you think right now with rates being that high, and mortgage applications actually went down last week?
Yeah.
But do you think that it could be a possibility of coming and asking for sellers concessions? I got a couple of contracts with sellers concessions.
Okay.
You have been.
Okay. So
Yes,
it might
I
be,
just
yeah, it may be possible, but I'll tell you that what we've seen, you can take that off there. What we've seen in the like statistically, keeps popping up there. Statistically, the inventory has gone down disproportionately to the buyer demand. In fact, last week inventory dropped down again, and buyer demand actually went up, even though inventory has dropped the last 3 weeks in a row. Like the ratio of it, but buyer demand actually picked back up again last week. So on a week-to-week basis,
Yeah.
it looks like there's just too much demand for the supply, even with interest rates going up, mortgage applications dropping, the inventory is dropping more than those mortgage applications. So there's still more demand than supply.
more demand.
Yeah, that's what we're at least seeing right now. That could change next week. I mean, that this can
Right.
turn on a dime, but that's what we're seeing at this point. So yeah, and then we are seeing some properties that maybe have been priced a little higher that we're kind of stretching
Right.
it. They are sitting for a little while, so maybe those are the ones where they're willing to do a concession versus dropping their price. There might be some work in that area. All right.
But so on your end, Tatiana, the mortgages, they've gone, the applications have gone way down. Is that normal for this time of year though?
Well, actually for me, applications went up, but
Yeah.
the data that came out are saying like overall in general, applications went down.
Yes.
And that was nationwide.
Yeah, like nationwide.
Okay.
Okay. So our area, that's we could be a difference too.
That's it, exactly right. To your point is, these articles that we're reading is that the real estate market is slowing way down. And we're hearing it from people around here. We've been doing, thankfully, pretty decent the last several weeks.
Yeah.
So,
Yeah, the market, I think the volume has slowed down, like compared to last year. But so here's something interesting. I just did the report of September 2023 versus September 2022. And each time I do these monthly reports, the inventory and the transactions have been about half of what they were in 2022. But September versus this year versus September last year, it was about 10% less.
I noticed that. I noticed that.
Because last year it dropped drastically in September and October.
Yeah.
That's when actually we were in summertime. It was still almost as high as 21, but then it's just like crashed.
Yeah. So the market has kind of stabilized a little bit with these interest rates. So and that's just the number of transactions and everything. So I think that we kind of came down and hit this bottom, and all of this is number of transactions, not prices. Prices have continued to go up, but I think we kind of hit that bottom because we're at like 2008 levels of transactions. And then I think that from this point, we'll start kind of picking back up on that, even if the interest rates stay where they are or go up a little bit, because everybody's kind of adapting to it. All right, anything else? Any other points of wisdom for us?
I think that's it. You know, the points of wisdom is watch videos of Sean and Kelly because they're awesome. I
Thank
love it.
you.
Seriously, you know, it's true. They're really, really good. Thank you
We
guys
appreciate
for
that.
doing them.
And get in touch with Tatiana
Yes.
for all your mortgage loan questions
Yeah.
and to get that pre-approval. Guys, we cannot submit offers. No one's going to look at an offer without a pre-approval.
Yes.
Tatiana, will you tell everyone how to get in touch with you?
Give me a call, 571-245-3000.
Okay.
Thank you
Okay,
so much.
I gotta say something
Oh, wait.
real quick.
Okay.
Okay, a PS. Do you know what a POFA is?
Lufa?
Have you had any clients call you and ask you for a POFA?
Pufa, I know Pufa.
Okay, so we did a video call and we call it a pre-offer full approval.
Right.
So that we can get that shortened, like we did with that client that was able to close in 10 days with you.
Yes.
Cash,
Fully approved.
where they're fully approved and ready to go. So if anybody ever calls you and asks for a POFA, say Sean and Kelly sent us for a POFA, just that's what it is, okay?
Okay.
It's a pre-offer
We made
full
it.
approval.
I mean, people are listening.
Yes,
If they
high five.
Maybe you need to copyright it. I like that.
Yeah, we're gonna trademark that one. Home of the POFA.
Pufa.
We need Mofa Pofa.
POFA. All right, anyway, have a great week. We'll see you next
You too.
week. And thank you for your time.
All right, thank you guys.
All right.
See you next week.
All right.
Bye.